Ready me. Here's the password now.
Ahora porque no tempo, tu no tempo.
No, the on. Lost them.
Tira tu ready.
Please endeavor to mute your mic once you're coming in, please. That's the first thing you check. Mute your mic, please.
Hello?
Good evening, all. Mute your mic, please. We are about to start the meeting. We need to have a very quiet room. Please mute your mic. Thank you. We are starting now, please. Make sure you mute your mic. Okay, good evening, everyone.
You said your driver was in.
Good evening.
Good evening. Good evening.
Sure. That you come?
Emma, please, I just made you a co-host. Mr. Stanley, I just made a co-host too, so that you can help control the room, please. I can't even hear myself. The noise is much. We are starting. I'm just trying to mute persons that are making noise.
Who with this one now?
I think the noise has been conquered now.
Okay, fine. Good evening, everyone. Good evening. Good evening to you all. Good evening, traders.
Good evening.
Good evening.
Good evening.
All right, I welcome you all to today's webinar once
Recording
again.
in progress.
If someone's background is noisy, I can't say anything. You just have to mute your mic. You know, I can't hear myself and you can't hear me. Just mute your mic. Good evening once again. I welcome you all to today's webinar. For the sake of new persons in this room, these are weekly webinar, weekly market analysis. We host this every Sunday by 9 p.m. This is where all of us traders meet on weekly basis to have an outlook, weekly outlook on the pairs we should buy or sell. And this has been very efficient because we come together to analyze some pairs together. We know our views and what I always tell people that is my own part of market sentiment. We give our sentiment based on our different strategies, individual strategies that we use in engaging the market. Okay, so for the sake of new people that are just joining this room, it's just for you. I'm not saying you might not contribute anything. I just posted it in the group so that you come and understand, you begin to understand how these things work. Yours is just to listen. That's why I say you should mute your mic. Listen so that as time goes on, you begin to understand how these things work. If you have your notes, just put your notes by the side. Whatever we analyze, put it down. If possible, as we are giving market price, entry prices, possible stop loss and take profits. If possible, write them down. You might not trade them, but at the end of the week, go through what we analyze for the week. Look at how it played out. Look at the ones that failed and why they failed. This following week, you can even call up on the pairs that failed or whatever. But just for you, it's just for you to listen and try to understand how these things work. That is why I sent all the groups so we can join this weekly analysis. And for those that have been participating in this market analysis before now, I always urge us to prepare for this class. You know how efficient it has been. I've always, this is a new year, I will always say, let's all be prepared. We might have made some mistakes last year. Okay, let's all come together and see how we can make progress this year. So I urge you all to actually prepare for this class on weekly basis, analyze your chart, look at what you want to present, and so that when we come here, we can discuss together and decide on which pair we are going to trade for the week. So I welcome you all. We'll be starting now. Okay, I'll start, then I'll just give my view on some few pairs. I have my boss here, Mr. Josh is here. I have my colleagues. Biam, I can see you. You're welcome. Good evening, sir. Emmanuel is here. Stanley. I have all of my colleagues here, and everyone, you are all welcome to today's class. I hope we have our pen and paper beside us to put everything down we'll be doing this evening. Okay, I'll be sharing my chart now. I will start with USD CAD. I will start with USD CAD. Based on the fundamental that came out on Friday. Of course, my bias on USD CAD has always been a buy. I have been on that buy for some time, though I exited sometime last week. My bias for USD CAD has always been a buy. I'm going to share my charts. Sir Josh, please help me admit persons that are still coming in.
We can't see your screen. We can't see the screen.
I'm sharing it. Okay. Okay. All right. This is USD CAD. Okay. My pattern of trading, for the sake of my pattern of trading, I trade most times moving average, but majorly price action. I'm a price action trader. Trend line, when you talk of price action, you talk about candlestick, inclusive candlestick, trend line. Sometimes I make use of moving averages, which are indicators. So I combine these three things to get my entry point. So for USD CAD, and I trade on weekly time frame, daily time frame, and I get my entry mostly on H4. I don't always visit H1 except on very rare cases. So if I'm giving my analysis, if I give my analysis, don't I expect it to play out immediately? Though most of the times, based on my little experience, let me put it as a little experience, based on my little experience, I know I can give analysis and it plays out almost immediately. Yes, but not always all the time. Why? Because of my time frame of trading. I can decide to use over 50 pips to 80 pips stop loss based on my method of trading. Okay, so if I do analysis sometimes, it might stay for 2 days, 3 days before it plays out. But what interests me most is if it's still within a time zone, if it's still within a price zone that I'm interested in, I will still hold on to that market. It might take 2-3 days before it plays out. I will still hold on to that market. So I don't give my analysis or entry on 15 minutes and expect it to just play out within 15 minutes or 30 minutes, an hour. So I'm looking at USD CAD weekly time frame. Using my trend line, it's still a buy. Our first entry was at 23,000. It came to 25. I got into 25,000 on USD CAD. That was on this level, and it did all of this. I stayed on that market for over 1 week, and all of this happened. It made over 500 pips and came back. I took entry after some around here. It retraced to around here. Then it came to 26,000. Now it has gone back to 27,000. I'm still anticipating a bullish move on USD CAD. But for the week, just as market is opening, this is weekly. You can see this, for those of us that are still in new class, you can see this hanging man hammer on this weekly time frame here, okay, at 27,000. I am not going to get an instant buy at that price. Okay, I'll wait for price to come, but it's a buy for the week. This can happen around Wednesday. I want to wait for price to come back to around
Is that black water in the context of laptop?
25,000, 26,000. That would be my next entry price for USD CAD. That should be on this trend line. I will use this trend line to which I know that is a bullish market. I might not be interested in the sell, but just watch the retracement within the week. And you can use your lower time frame to get entry. But as soon as price comes back to around 26,000, it should be an entry point, and it's going to be a buy and hold. If you're able to get into a USD CAD around this other price, it's going to be a buy, and because it's taking out this 29,000, it's taking out this high. The next bullish move, that is if it does not move from where it is now, but I am not buying from where it is now because it's going to be too much risk for me. So I'll wait for price to come around 26,000. At this level, that will be my next entry on USD CAD, and it's going to be a buy and hold. You can hold it for like 1 month, for like if I get into USD CAD again, I will hold it for long. So USD CAD is a buy for the week, but it might not be an instant buy. Might not be an instant buy. Wait for a little retracement for a buy. Then we'll get into USD CAD for a buy. Then the next one is GBP CAD. GBP CAD. Also, GBP CAD is also a buy, but not an instant buy. Not an instant buy. Okay, sorry. Let's get back to USD CAD. Let's get back to lower time frame. So I will show you on H4. On H4, that was weekly. See daily. This is daily chart. This is daily chart. So this is where it is currently, which is 1.27 thousand. Okay, so I will wait for a retracement back to this trend line. Back to this trend line. This is on daily. You can see how after like 4 days retracement, almost a day, that was on Friday, brought it back to this high after 4 days retracement. So it tells you there's still strength on USD, there is volume on USD. That's what it simply tells us. If you watch on H4, we have this on H4. It's already on a high. Yes, I know that the high can be taken out. No, I'm not disputing that fact. But nothing will make me buy at this high. Nothing will make me buy at this high. I just wait for a little retracement. You just use your trend line and gauge your price. As soon as it comes back to that trend line, well, you can watch some pattern of candlestick. If you get your candlestick entry based on lower time frame, get into USD CAD, and it's going to be a buy and hold. Okay, you can buy it and hold it for 1 month. That's for USD CAD. So the next one is GBP CAD. GBP CAD will go for an instant sell. Instant sell. GBP CAD, instant sell. But it's an uptrending market. But I expect a retracement of over 200 pips before the next buy will take place on GBP CAD. So we are entering. If you choose an instant sell, good. If you want to wait for spread to reduce for you, this is GBP CAD on H4. Currently is at 1.7200. 72. Let me check the price again. Yes, 1.72. 7270. 1.7270. So I expect my entry is an instant sell for USD CAD for me, just because I want to. It's a whole number of pips before the buy will commence. Okay, so if you get in for a USD CAD, wait for it around 1.7100 for a buy. For GBP CAD, sorry. If you get into GBP CAD for a sell, don't stay too long. At 1.7100 is going back for a strong buy. a strong bullish move. A strong bullish move. That's for GBP card. So instant sell on GBP card because it has a whole number of pips down. Then after that, wait for a buy. Wait for a buy on GBP card. This is weekly time frame. You can see how bullish it is. Yes, it's very bullish. It's just a retracement. The sell is just a retracement. But GBP card is coming back to this level. It's coming back here. That is, it's coming. This is weekly. It's coming back to 1.75 thousand. That's where GBP card is heading to. It's a strong buy, but it will do a little retracement. GBP card, from its behavior, it will do a little retracement, and it will be some good number of pips before that buy will commence. So if you choose to take on the sell, me, I'm going for a sell on GBP card. Okay. Once it gets to 1.7100, do my entry for a buy. If I can get into that 1.7100, I am really taking it to around 1.7500. That would be over 500 pips. So that's it on GBP card. That's it on GBP card. The next one is NZD-USD. In as much as I know that USD is a bit strong, I'm also anticipating a buy on NZD. I'm also anticipating a buy on NZD. This is weekly, and the buy, you can see that is almost back to this low. This is weekly. Okay, it's almost back to 0.65 thousand. That is saying that is 65, yes, 65 New Zealand dollar to one USD dollar. USD. So 0.65 is our entry point for a buy. Please, it's going to be a very tight stop loss. The stop loss should not be more than 50. It's not an instant buy. Just allow it hit that. Let me show you on H4. Just allow it come back to that price of, which is here. $0.6500 is around here. That means you still have some move to the downside, almost 80 moves to the downside. So please don't, it's not an instant buy. Allow it touch that price. Allow it touch 0.6500. That is my entry price for a buy on NZD-USD, and it's going to be we're going to use a very tight stop loss on that zone. You can see this is where it is on weekly. This is 0.6500 on weekly time frame. This level. So from where it is to that 0.6500 is about 80 pips. I am not, you might decide to sell it. Well, it will be good, but then I am not selling it. I will just allow it to come to this level. Once this will be my entry point, and it's going to come with a very tight stop loss, not more than. You can even decide to use 30 pips as your stop loss. Once it touches that 0.6500, that's our entry point. If it takes it out, then it's coming down. But I doubt this will create, though it might give us the first push, the first move at this level. Then on our lower time frame, let's look for, if we were able to join that first move, it will still come back to create a pattern. Remember, I always tell you, prices don't just reverse. On lower time frame, if a market is trending upwards or downwards, and at a point you anticipate a reversal on a higher time frame. On higher time frame can print hammers, can print inverted candle, inverted hammers, shooting stars, and all of that. You can print dojis and all of that on higher time frame. If you step down to lower time frame, it must, 90% of the times, it must print a pattern, either a head and shoulder or inverse head and shoulder, double top, double bottom. There are so many what's it called? Or it must print a chart pattern to tell you we are exhausted on this trend. We are going back to the upside or to the downside. Yes, you might, unlike the Euro GBP. If you people remember 2 weeks ago, I was talking on Euro GBP. It was exactly on that price I gave that. Me myself, I didn't take it. I even forgot because I waited for it 2 weeks ago. It didn't go. And I was telling you guys, let's wait for a pattern. Let's wait for a pattern. Let's wait for a pattern. Let's wait for what's it called? A divergence. It happened. It didn't happen that week. The second week, it didn't happen. It was just last week that the move started, and I wasn't there. I didn't even take that trade. As he made over 300 pips last week, getting to 500. Okay, but it was ranging on that low, exactly on that price. That was where he moved. This is Euro GBP. I remember. In fact, I marked it and this is Euro GBP.
Isn't it?
Yes, sir.
Please let me get your bias for NZD/USD again, and where you want to buy or where you want to sell.
Okay, I'm coming. I'm buying at 0.6500. That's 0.6500 with a very tight stop loss. This is it here. This is H4. This is daily. This is weekly. On weekly, this is it. This is the price. 0.6500, which is here with a very tight stop loss, not more than 50 pips. If it doesn't go from here, then we know that it will continue the downtrend in market. Is that okay?
Yes, continue.
Okay, so that's for NZD/USD. Then Euro JPY. Euro USD. Euro is strengthened. It's going to continue the buy, but let's wait for. Of course, we're not buying here. Nobody is buying at this point. So we'll wait for Mr. George who always say it needs to come and fill the void. You can see that there was a void created on Friday. On Friday, yes, that was on Friday. Thursday rather. There is a void. You can see it more clearly on H4. This is on H4. Okay. When he comes on, I know he will explain more of the void. He is better from him. Yeah, you hear it better. You understand it better when he's explaining it. But then there is already a void created here. So I know that voids can be filled at any time. Nobody says that once a void is created, it must come immediately to fill it. Void can be filled even after a year, even after a month, even after, it can happen even after a day. It can be filled at any time. But for me, based on my method of trading, I can't buy here. So I will expect this void to be filled first for Euro USD before I get my entry. So my entry will be around this level. As soon as he fills this void, of course, the master of handshake, to come and do a handshake with this candle. That's where the void will be completely filled. Then our entry will be around 1.13300, like 1.130. That will be our entry point, which is around this level for Euro USD.
1 point what? Sorry.
1.1330. 1.1330 is our entry point for Euro USD, which is around here. Let me put the number. 1.1330. Yeah, exactly. At this point, that's our entry point for Euro USD. Please, at no reason, you don't have any reason of buying Euro USD. That's where it is. And you might not even, because a trend has been established for the meantime, please don't even, you might not want to sell. Nobody says that it must come and fill this void now. It might decide to buy, continue this buy from here. You can't question the market. You can continue this buy from here. You can't question the market. But as an experienced trader and as people that have been trading for some time, you know that it's not just the right place to buy. If you must buy, allow it to retrace, allow it to shed off some pips, allow it to give you a discount price for you to engage the buy if you must buy. I'm not interested in it. I'm not selling it because the kind of move that Euros made on Thursday, Friday, if he makes it again, it can blow off an account. So there's no point in me countering the trend. I'm not countering the trend for any reason. So I would rather wait for it for a retracement than I will buy. Why I'm buying it is that USD is not so much strengthened like that. Yes, USD has started recovering, it has started showing some strength. When we're anticipating a strong push on USDs from March, once their interest rate is being tampered, then we'll see a very crazy move on USD. So their strength is just bit by bit. Now it's not so strong like that, but still not weak. Still not weak. So, and that is why I'm still buying Euro USD for the meantime. And that is not at this price, at a discount price. When it comes to fill on this void, then I will engage for a buy on Euro USD. I have some other pairs, but I don't want to take all the time. Let me allow some other person to give their views. So if my colleagues in the house or any participant in the house, if you have anything to share with us, you can go ahead. Sir Josh, over to you. Thank you very much.
Thank you.
Thank you, Zina.
Thank you, sir.
Good evening, everyone. Good evening, everyone. Sure you can hear me.
Good evening.
We can hear you.
We can hear you.
I hear you.
Thank you very much. Isn't it? Thank you so much.
Yeah.
I appreciate your analysis. Like Isn't said, if you have any pair you're looking at, you want us to analyze, that would be good. Always sounded it in this webinar, in this analysis. You will learn better and understand the dynamics of the market if you do your own homework and come back, bring it, to analyze it. Even if it is wrong, you'll see where you did not get it right, then you will make improvement. But if you just stay every day, just wait, okay, it's almost 9 o'clock, okay, let me just log in and see what they say. Yes, you would be getting an analysis, but you will not build your confidence so fast because you're taking on someone's trade. You will not build your confidence so fast. And our desire is to raise traders that can be independent. Whether this webinar continues or not, you can be independent and trade independently. That's our target. So it's better take your time out, view the chart, and see what happens. Then you can always come back here. Here is not a place where we do. We're not newscasters. What we'll do is that we reason, we discuss, and get to know some pairs we're trading for the week. Like I always say, you mustn't trade all the pairs. All these things we're coming up with, we don't trade all. Very candid to you. It's nice if we trade all. And we just look at what the market gives us. If where we have so much opportunity, we invest our energy in that opportunity. We invest our energies in that opportunity. Even if it is one pair, it can give you what you need for it. That's a simple truth. Can give you what you need, even if it's one pair. What it means is that you stack entries, the market move, then you collect something. And if you make, depending on your account size, you make $10, $20, $30, $5, $100 a week. It's not a bad one. It's not a bad one at all. Okay, so let's see. Isn't please take off your chart. Let me do it. Hello, isn't it? I think I have some pairs I'm looking at. Let me start with Euro NZD. This pair has just been a very beautiful pair. Euro NZD played that last week very well. Played that very well last week. My bias was we're supposed to take those people that getted it down. I gave this analysis last 2 weeks. And even last week, I still remain. I was still on that. I was like, my bias for Euro NZ is still a buy. And I said the buy for Euro NZ will get to 1.71500. That's what I said. 1.71500. And you see the market go to that point. When I did this, I did inverse head and shoulder. The market is coming to this point. And see the market even go to this point, even tear all the resistance line and continue. Yeah, so what we are looking at now, the Euro NZD, we'll be expecting a little pullback. It's a buy market, please. It's a buy market. The buy will continue. Isn't it? Please be welcoming people to the room. Isn't it? Welcoming people to the room so that I don't lose them.
Yes, I'm on it. Go ahead.
Give Robinson, I think Robinson is in this room. Give Robinson and Abandon, they're in the room. Give them co-host so that they'll be assisting fast. So let's not keep people waiting outside. Okay, so now we have Euro NZD. We're expecting Euro NZD for a still continuous buy, but the market will not just continue to buy. The market will do a pullback. Euro NZD will do a pullback. Like Ezine will always say, I'm a fan of a handshake. I'm expecting Euro NZD to come do a handshake with this candlestick here. This one here. So we're expecting, at least this week we're expecting a brief sell, a very short sell for Euro NZD. A short sell, Euro NZD. Euro NZD will be selling up to this point. We'll be selling. The market, in fact, market is even giving us some opportunities to sell. We'll be selling. We're expecting something like we'll be expecting like the 250 sell for Euro NZD. We'll scale down and do a top down analysis. So we're expecting something like 240 pips for Euro NZD before it will continue its down. We're expecting something. Sorry?
Your screen is black.
What? What?
Your screen is poor.
What?
The screen is not clear.
The screen is not clear. Please, others confirm if my screen is clear. Let's know what.
Yes, it's not clear.
It's true. It's true.
Your
It's not
screen
clear.
is clear.
Not clear.
Clear.
Not
The
clear.
screen is
It's
clear.
blocked.
It's blocked, please. It's not clear.
Your screen is clear. You should check his network.
It's clear.
It's not
Okay,
clear.
the screen is clear. Just check your network, please, my brother.
No,
Okay,
our
next
own was
one.
clear.
Nothing
Our
wrong
own
with
was
it.
clear before. Our own was very clear before.
Very clear.
It's
And
clear now.
network will fluctuate.
It's better now.
Is it clear now? Okay.
It is very
Yes,
clear.
it's clear now.
Nothing wrong with it.
Okay.
Clear now, clear now.
Okay. Thank you. So now, what we are saying is that two things is either this market will come back to do a handshake with this where I have this my line, this one here. This one here. Where I have this my line here. Okay, where I have this line here, I don't know why the thing is not here. This line. Is either it will come back to have a handshake here, or the market will come back to this place where I told you the market will get to. That is 1.71580. The market will get to this point, and the market will continue the journey to 1.7600. That is where the price will be going to. So we're expecting a short buy. A short buy. I said it's either we're expecting the 250 pips, or we're expecting the 150 pips. Either 250 pips or 150 pips. That's what we're expecting. The market will continue the buy. So now watch out, put this mark on your chart. We'll have 1.71550 as where the market will come to. Then we'll continue our buy. We'll buy up to 1.7600. From that place, 1.7600 will be giving us a whooping sum of over 463 pips. 463 pips. That's what we're looking at. So it will be a long buy. It will be a long buy. If you are in a lower time frame, I'm not telling you that this market will come to this point, 1.7600 by this week. This week we're entering. But what we're saying is that the market will get to that point. But we're expecting a brief sell this week, either Monday, Tuesday, Wednesday. Then we'll be expecting a buy. So look out for a sell for Euro NZD. Let's go to D1 and see what's happening. Okay, D1 has created this. Now look at D1. The market did this. And like I told you, that's why I showed you something like this, that the market is coming to this place. If you understand what is an order block, this is an order block. This is an order block that the market is coming to. The market is coming to this order block before it continues this movement. And in a higher time frame, during weekly, we saw that it's coming for a handshake. So two things, I said this market will come to 1.71580, or the market will come back to this order block and continue the movement. If you see the market come down to this order block, please engage that market for a buy because it is well discounted. Now let's go to H4. Look at what's happening in H4. Now look at the market has started giving us a sell signal for H4. Sell signal for H4. Well, let me tell you one thing about how these people trade, how the smart traders, the institutional traders, what they do to retail traders. This market has given a signal for a sell. You see that the bearish candlestick has appeared for a sell. So many persons, I can tell you, have started selling this market. So many persons have started selling this market as we speak. So many persons have engaged this market for the sell. You know what they have done? They have put their stop loss. Look at where some persons, their stop loss is somewhere around here. Somewhere around here. Some persons are a little up. Some persons just here. You know what these market makers will do? They will come back by the opening of this candle of the market tomorrow or today. The market by 10 o'clock tomorrow. You see this market will go up a little. What is it going to do? This market, you just see this market a buy somewhere around there. You see this candlestick will come out for a buy. By the opening of the Asian section, taking us to the London section, you see a massive buy. What are they going to do? They are going to hunt something. They are going to hunt your stop loss. Those persons that engaged in the market for a sell, you see they will go to take their stop loss. I told you that the market does not, even the market makers does not know the direction of the market. Where they move is where you have your stop loss. That is where they go to hunt your stop loss. That's what they do. So now so many persons have engaged this sell. They will do what? A stop run. They'll go do a stop run on this high. By the time they do a stop run on this high, they will take out all the stop loss there, then they'll start moving. That is when you see a massive move up to this other block. You see a massive move up to this other block. Now you see the market will start selling and it will sell. So many persons that were in that sell will say, hey, I was in this sell, look at what happened. Yes, they went there because they've seen liquidity up there. They are going to hunt your liquidity. Because if they don't hunt your liquidity, market will not move. This market will range if there are not enough liquidity. If they look that by Monday, the liquidity is not much for them to hunt, they will range the market on Monday. On Tuesday, because they know that so many persons will say, this market has not been able to break this resistance. That means the market will sell. They will enter the sell and put their stop loss up there. They'll be waiting for enough liquidity. By the time the liquidity which they expect is there, now they will go take a buy position, buy that market up to that point and engage the sell. Then they will move alone. They don't want you to move with them because if you move with them, you will deplete their income. So they want to move alone. And the best way they move alone is to take your stop loss. By the time they have taken your stop loss, then the market will move. That is why you see all those BB candles. Most traders are not there in those BB candles. Why? Because they feel that they've been hunted out of the market. They've been taken out of the market. The market will sell. So what I'm saying is that Euro NZD we're expecting a sell, or it might not be that you sell immediately. Wait, let's see by 10 o'clock what will happen to the candlestick. The candlestick might just open up and you see the market will go down a little, but a massive move up. It will take her this high. Take her this high, leave a week behind, and we move. And that's why you appreciate that statement. We move. The market will move to that direction, which you expected. They know the market will sell. Their bias is that the market will sell, but they don't want so many persons to join them in that sell. All right, thank you very much. That is for Euro NZD. So let's look at it. Okay, so let's go to Euro GBP. Euro GBP, let's see the weekly formation. Yes, Euro GBP market has been selling for so many weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9. Market has been selling for over 9 weeks. 9 weeks is approximately 2 months. Market has been selling. We are admitting people into the room because I'm seeing notification.
I'm doing it.
I'm admitting some. I'm admitting them.
Okay. So the market has been selling for over 9 weeks, which is 2 months and some weeks. And you expect, definitely you expect a pullback. Now this market has moved up, giving us an engulfing candlestick. Yes, my bias for Euro GBP is still a sell. My bias is a sell for Euro GBP, not minding what this candlestick has done. I'm still expecting a sell in Euro GBP. Expecting a sell. Why? Because where the price is now is on a very, very, very is on a level. Is on a level. When we talk about level, we talk about the native levels. This market, look at this place here. If you look at, I have my period separator. This period separator is 1 year. If I can you see my can you see my chart? Don't know, hope some persons. Please, if you can see my chart, see. Okay.
Yes, we are seeing it.
Okay.
Not clear like how on is more clearer.
Okay, it seems isn't it my boss? She's using a paper laptop. Okay, is it clear? I shrink the chart. Huh?
Better.
Your chart is blurred.
It's
clear. It's clear to me. It's clear.
It's better now.
Clear.
It is blocked now.
Was it better before?
It's better now.
It
Yes.
was better
Mr.
before.
Joshua.
Yes,
It is
Yes.
better for those using laptop and computers, but to ourselves that is using phone, it's not better for us.
Okay,
How
Mr.
is it?
Good evening,
If you're
Mr.
using
Joshua.
phone, can you slant your phone?
I'm
If you're using
using
phone,
phone
can
and
you
it is
slant
clear.
it? Okay. All right. So let's continue, please. I shrink the chart because I wanted to show you something. Now, don't worry, I will expand the chart. If you look at this, my line here, this line, when on your chart, you can put it as a, if you're using laptop, Control Y, it is called the period separator. Period separator gives us, separate the either days, weeks, and months. Now, I am on a weekly time frame. It means that the distance between the two separator is 1 year, 1 year period. Now, if you look at where the price is now currently, the price is at the low of 2020, the low of 2020. Price has just, the high of this treasury candlestick, one that closed on Friday, has just come to meet with the low of 2020 and the low of December 2019. So it is a very important level that price has gotten to. So I'm expecting a sell of Euro GBP. I'm expecting a sell of Euro GBP. But even if Euro GBP will buy a little, let me show you where I'm expecting the buy. But after that, I'll be selling Euro GBP. Remember, GBP hiked their rates. GBP hiked their rate. So what they are doing now is just a pullback. They will continue their movement. Okay, so what I'm looking at now, if you come to D1, look at the other block. Look at that other block where I have my rectangle, shaded rectangle. Is an other block that the price will come. Possibly I'm expecting price, even if the price will buy, I'm expecting price to buy, enter into this other block and leave wick behind. Once, look at, just watch your chart. Once the price enters into this other block, once it enters into this other block and did not leave at least 50% of its body into that other block, please, we have said we are in for the sell. If it did not leave 50% of its body into this other block, then we are in for a sell. Euro GBP, we are in for a sell. So I told you my bias for Euro GBP is a sell. Even if the market will buy, when the market opens, even if it will buy, I'm just expecting, mass I could expect is 49 pips. 49 pips for Euro GBP. Once it leaves weak behind and close below this my other block, we know that the market have entered for a sell. The market is now in for a sell, is in for a sell. That is what my bias for Euro GBP is. It's in for a sell. Sell. That is what we're looking at. And if you look at it now, look at what I'm telling you. In H4, have you seen that the candle has started losing steam? The candles are losing steam. If you look at the very impulsive candles that the market moved with speed, at this point, look at it, the market got to this point. The last two candlesticks for H4, before the close of the market on Friday, lose steam. It did not take out this high. But there is no problem. Like I said in the first pair I talked about, Euro NZD, market makers know that with this thing they have printed here, this candlestick they have printed here, so many persons will enter in for a sell. They will enter in for the sell. What would they do? They might take this price down a little. The next move, they will take it up. Once they take it up, they are going to hunt a stop loss before they start moving. So I have told you, my bias is a sell. But even if the market wants to buy, I've told you we're not buying more than, I am not buying more than 45 pips if I must buy. I'm not buying more than 45 pips because I know this market, why they want to do that is that they want to go do a stop run. They want to go do a stop run. And immediately they do a stop run, then the market will move. Market makers does not move unless they have done a stop run. When they do a stop run, then the market will move. So they will definitely want to come and take out the stop loss of so many persons here then before the market starts moving in the direction. And if it moves, then we are selling. We are selling. So it has so many void is coming to flow.
Josh, good evening. Good evening, Josh. Okay, Josh, good evening.
Yeah, I can hear you, Master.
Yes, I just want you to look at it once more again. Can we go to the weekly chart of this Euro GBP? When you last, yes, the weekly chart of this Euro GBP.
Yes, look at it here.
Yes, and when your RSI was there, I observed a kind of divergence. A kind of divergence. Where? Yes, when you put your RSI, I observed a kind of divergence.
Yes, there's a divergence. The divergence is in H4.
Yes, then
okay.
There's a divergence.
There's a divergence. Yes, there's a divergence for a hidden divergence.
Yeah.
Sorry, let me put it.
So if you can just put your RSI, let's
look at the RSI.
Okay. So I see a divergence here, which means
divergence for
the weekly, which I'm thinking
divergence
that
for
regular
on the weekly.
The price is making lower lows and your RSI refuses to make lower lows. There's a divergence there.
Are you talking about this?
There's a
divergence. Are you talking about this? Are you talking about this?
Yes. Yes.
Are you talking about this?
I'm talking about there, yes.
Yeah.
Yes.
I know what you're talking about.
Huh? Yes. Yes.
Yes, now this is a divergence. This is a divergence. This is a divergence for a buy. That is that divergence that brought this price up.
And please, can you go to the monthly? Can you go to the monthly chart again? Can you go to the monthly chart again?
Chart. Yes, look at monthly chart here. This is a monthly chart.
So I'm looking at a trend line from
where?
You have a trend line.
Yes.
A trend,
From where?
yes, a trend line.
From
Up to
where?
this, last candlestick.
Is it a bearish trend line or a bullish trend line?
Yeah.
A bullish trend line.
Bullish.
Bullish
How?
trend line from where?
From where?
From this week? From this
Yes.
low?
Yes.
This low to where? Yeah.
To the yes.
Yeah.
It's not a bullish now.
Yes. Exactly.
How is
Yes.
this a bullish? How is this a bullish piano?
This is
No,
not a
this
trend line.
This is not
It's
this.
not a trend line.
This is not a trend line.
No, you've not connected 2 points. Earlier, early 2 points. This is just forming. Let me show you something. Now, see, let me take on a monthly time frame. Let me expand this. Let me expand this so that everybody will see my chart.
So if possible, remove
Now,
moving averages.
okay, let me remove so that it will be clear.
Mm.
Okay, now look at it. What I'm saying is that, hope you can hear me. What I'm saying is that, see, for 2 weeks, this market sold for 2 weeks. Sorry, for 2 months, this market sold for 2 months. What this market have just done is come back to do a to do a pullback. This market have just done a pullback. To me, this market have done a pullback. This month has not ended. For you to say this is an engulfing candlestick, the month has not ended. In fact, we just started February. This February what? This is about February 6th, right? We just started February 6th. This is February 6th. So you cannot tell me that this candlestick that is just forming in February has done an engulfing candlestick for the previous month. It's not possible. You cannot give a decision for this candlestick until the month has ended. And that is why you need to scale down to know what is happening. Are we together? Hello?
Mm. Correct. Yeah.
Yes,
Good.
yes.
Good. Good. So you cannot give a decision. You cannot take a decision based on what this candlestick have done. No, you cannot do that. What will happen is that you can just be surprised that this candlestick before the end of February will be a bearish candlestick.
Huh?
Sorry? You define the candlestick. So you will just be surprised that at the end of the month, this candlestick will just be a bearish candlestick, irrespective of this thing he has done. So now that's why we're not looking, even if you look at the monthly time frame, what you look at monthly time frame is that the market has traded has sold for 2 months, and the market has just done a pullback. It has not taken out this high for you to say it's a bullish movement. Now, what are we looking at? Even this month, it has not, unless the market will close like this, then you know that we'll continue to buy for the next month. But with this thing that happened, it happened just within, it was just on Friday, on Thursday, Friday, that the market did all of this. But what we're expecting is that you scale down to a weekly time frame. You scale down to a weekly time frame. If you look at the weekly time frame, look at market sold 1, 2, 3, 4, 5, 6, 7, 8. It just did a step up here. Now sold back again before this candlestick came out. The market has just done a pullback. If you look at it, even this divergence you showed me here when we shrink the chart, is a divergence that brought about this buy. If you have seen that divergence early enough, that this market is doing a lower low, and this one has refused to go down, you'll know that this market will soon turn, will soon buy. You would have entered this buy for entered this buy. So that divergence produced this buy. Do you understand? Now, if you scale down to a D1 time frame, the market has done this. The market has done this. Now, the market did this push up. Look at an order block. This is an order block. The last bullish candlestick before a bearish run. The market is coming back to interact with this order block. That is why I told you I am buying a very short. I'm buying very short, which is about 54 pips based on my order block. Once this order block, unless this order block is nullified, then I'll be looking at a buy bias. But if not, this market will enter into this order block and leave a week behind. Leaving a week behind will scale down for a sell. That is what we are looking at. It will scale down for a sell. Let me show you another block again. Look at it. Look at this. Let me give you an example. Look at another block here. This is another block that took this market down. This is another block. Now imagine this market, this is another block. The market entered up here. Once the market entered up, it came to do a stop run on this one, this other block, because sellers were in this market. It came to do a stop run on this. Look at this week. Did this stop run? The next the market sold and sold very well. Now, what we're expecting is that this market will go up. If the market, like I said, leave a week behind or close below this other block, I told you it's an opportunity for us to sell. Let me scale down to H4, show you a divergence. Now, now what are we looking at? This is okay, even in this daily, I am still seeing, yeah, it was in daily I saw the divergence. Even in this daily, I am seeing a divergence. I thought the divergence we saw in weekly brought the price this high, brought this price high. Now, when we look at the divergence again, this is this. Look at this. This is, okay, this is week here. Are you seeing it? This market, this one is doing this is a higher high, and this one is doing a lower high. Higher high and a lower high. When you take your chart, your divergence chart sheets, this will be giving you what's called a hidden bearish divergence. A hidden, but just to stop that. A hidden bearish divergence. That is what this market is giving me. A hidden bearish divergence. So what I'll be expecting is a short buy, then I will scale down for a sell. Now we'll start looking for, we'll sell this market. By the time this market does over 54 pips or so, thereabout, enter this other block and leave the week behind, then we shall be engaging this market for a sell. In fact, this is a pair I'll be looking at closely for this week. I don't know if I try to answer your question.
Okay, it's okay. I understand now.
Yeah, so that divergence led to this buy. Is what we led that was what led to this buy. What divergence helps you to do is simply to get an early entry, a reversal, an early one. So if you've spotted a divergence in a higher time frame, then you should be looking at trading in the direction of that divergence. That means you need to go down to a smaller time frame, a lower time frame, and be looking for opportunity to buy or sell, depending on what divergence is telling you. I would have taken this buy very well. Would have taken the buy very well. So now we're seeing another divergence. So let's see if we take opportunity of it. If the market does this buy, let's leave week behind, they will be engaging the sell. Okay, that's for Euro GBP bias. I'll be looking at GJ. This is another fine one. I want to invest my energy. GBP JPY. GBP JPY. I'm looking at GBP JPY for a sell. GBP JPY for a sell, and it's going to be a good sell. GBP JPY for a sell. If you look at it, this is D1. If you look at even the week, the monthly, okay, now let me expand my chart. Now, if you look at this candlestick, we look at this where we are, you'll see that this point is somewhere like a resistance. This is a monthly time frame. You have something like this. Now the market have created this. This bullish candlestick have not. This bullish candlestick, that's the current month, which is this February, have not taken out the high of the bearish candlestick that formed last month. That indecision candlestick that formed last month. Now we're looking at a sell. Look at it. Even if you do a candlestick pattern, 1, 2, 3. This is called a what's it called? This is called a sandwich. a sandwich, a bearish sandwich at the resistance, a bearish sandwich. The red has given us the direction. And this market came up for last month, it came up, did a stop run on all of this, and we're looking at selling this market. Now, this one that is forming, let's see what happens. Then we'll go to a weekly time frame. We're doing top-down analysis. We're going to a weekly time frame. Now, weekly time frame has printed this, but the market have not actually taken out this high that it has printed. Now, the market sold for 2 weeks. Now, the market started going back, like if you understand the most times like that, I'll tell you that the market is going to do a handshake. Now, the last week did a handshake with this guy, this candlestick here, did a handshake. So we're expecting a sell down. As long as this market does not take out this high, we'll be looking at selling this market. Now, when you go to G1, in case I'm fast, you can call my attention. When you go to G1, you see this market did this high, came back, did a retracement. Now coming back, this one have not taken out this high. Immediately, this market did not take out this high. If the market opened and did not look at my other block here. Look at another block I drew here. I'm expecting this market reacted at this other block. Look at it. The last bullish candlestick before the bearish run is an other block. It's reacting at this other block. I'm expecting, even if this market wants to do it high, take out this 2 week. If you look at this is a daily time frame. If you go to a lower time frame, only those two candlesticks is what is called a tweezer. A tweezer, both the wick and the body. Tweezer, the wick and the body. Now, those in our basic class, current intermediate class will understand what I'm saying. This is a tweezer, both body and wick. So this market is going back to do what? Possibly take out this week. As they do a stop run on these two candlesticks, then the market will scale down. In as much as the market did not enter this other block and leave more than 50%, leave 50% of each body into this other block, my brothers, we are scaling down. We are scaling down. Where are we going first? Let's be very realistic with the chart. The market is not your own. First and foremost, this market will come here. This market will come somewhere here. And what are we looking at? We're looking at first, let me say from where this market is now, or let's say where the market moves. We're looking at over 190 pips. But that is not my target. Over 190 pips, depending on what I am seeing in that market, I'm scaling down to this point. I will tell you why. I'm scaling down to this place here, this place. That is where, look at the other block here. Look at another other block here for buy. Look at the other block. This one is for a sell at the resistance. This one is the last bearish candlestick before this bullish run is an other block. I'm looking at market coming down to this point. And if this market comes down to this point, play to the gallery, we're looking at price coming down to Jesus. This is almost over 500 pips we're looking at. That's why on my journal, I say it's a good sell. Market scaling down to over 500 pips. Are you ready? Let's make this. Even if it is only GBP JPY, I am willing to sell GBP JPY for this week. If I see opportunity to sell, I will sell GBP JPY for this week we are entering. I will not be scared. Selling GBP JPY. As long as the price coming, go up a little, I will be waiting for this market. I will even like it if this market will go up, take out this high. Once it take out this high and leave weak behind, the sell has started. That means it has done a stop run. If it has done a stop run, it must take out this low. It must take out this low. Take out this low for us to scale down up to this point. So GBP JPY is a very good sell. A sell by us. Put it on your radar. It's a sell by us. We are selling up to 150.200. That is where we're selling GBP JPY. We'll be selling GBP JPY. And what is it trying to do? Let me show you another one. For those ones that understand what is called harmonics, this market is creating a harmonic pattern. Look at it. It's an M formation. Those harmonics and the chart pattern are the same thing. Those are harmonics give numbers, that give values to it. But chart pattern does not. Look at it. It's creating an M formation. If it does not take out this high, it has created an M formation. So that is what the market wants to create, an M formation. If you understand harmonics pattern, you understand chart pattern, this market is creating an M and expecting the M. This is the point.
Excuse me.
Yes.
Hello, sir. Good evening.
Yeah, good evening.
Hello, sir.
Yeah, I can hear you.
Please, what constitutes another block?
Another block is, when we talk about other block, these are where the banks have their orders. Banks, the last person will tell you, come, let me teach you how to trade like banks, the big banks. So these are where they place their orders. When we talk about other block, it means where there are orders. Orders is where they have placed their trade. Like when you order for something, I want to buy. Like you place C, I want to buy like in the next 1 month. For example, let me give an example. If you anticipate that look, fuel is going to be expensive, it's going to rise based on whatever metrics that's happening. They want to remove subsidy, they want to do this, they want to do that. Those of us in Nigeria, it's okay. What will happen is that I'm anticipating in February, March that fuel will be expensive, will increase. Okay, you tell the guy, please by February ending, take this amount of money. If you will anticipate that the price will increase, please buy like 50 liters of fuel or 500 liters of fuel for me and keep it. You have placed an order. So that is what the bank does. They place an order, and where they place that the order is what is called the order block. When price gets to that order block, there is high probability that the market will do what? Will sell or buy, depending on where it is. So when we say an order block, we're talking about the last bullish candlestick before a bearish run. This is the last bullish candlestick. This one here. Can you see my mouse? Hello, dependent ask the question.
Yes, I can see it. Yes.
This is the last bullish candlestick before this bearish run.
Okay.
Before this bearish run. You understand? That's where they place their order for a sale. Now the market is sold. The market does not move on a straight line. The market did a pullback. They still have an order there for a sell. So once the market gets to that point, they will now scale down again for a sell. Do you understand? So that's why you see so many persons, when you talk about dumb traders, so many persons, when they see market sell like this, they come to this low now and say, let me sell. By the time you sell, they will dump the whole thing to you. They will sell to you. The institutional traders will sell to you. You will be holding a drawdown. They will move. Now take it to that their order and sell again. Do you understand? Because they cannot be selling, when they sell here, they are selling low. They want to take it high to a premium level for them to continue to sell. And that is why if you do Fibonacci, you will say, is the market at 61.8? Is the market at 78.6? Is the market at 88.6? Is the market at, by the time the market has taken, is above 88.6, that means possibly there will be a reversal. So when you look at this, for those ones that don't understand Fibonacci, if you look at this from this side to this place, this market has just given us, this is a 61.8 retracement level, which is a premium level. It's premium because it has passed 50. 50 is equilibrium. Anything above 50 is premium price for a sell. Anything below 50 is a discounted price for a buy. So if you understand Fibonacci, this market has done over 61.8 retracement level. Max, I told you, this market might come up because of so many persons have an order here for a sell. And the institutions, the smart traders will not want to sell when you are selling. They are interested in taking your stop loss. They will do a stop loss down to 78.6 or even 88.6, then they will scale the market down because they want to sell. And everybody know they have given you that chart pattern on the website or those books you read. They put on free books that you read. That when you see something like this, sell. Those ones that are in a smaller time frame, when they see these two candlesticks, they say, Twizzler. I learned that Twizzler is a sell. Okay, this is Twizzler, both body and week. Oh, we're ready to sell. Yes, they'll put their order for the sale and put stop loss above here and go and sleep. They will see these orders. The next thing, they will go take out this week and take out your stop loss. Then they will continue to sell. They know the market is a sell, but they want to stop front your orders first before they move. And that is why most times you see, I place a sell for this market. This market started buying and seeing and don't sell at the end of the day. Start blaming yourself. Why? Because you do not understand. Even if it gets to another block, they will bring a candlestick to show you that looks sell. I as somebody that does not understand the market. By the time you sell, they wait for you. You put your stop loss. And you know that when they want to see now, when they want to buy, so many persons will enter the buy, put stop loss somewhere here. People enter the sell, put stop loss above here. What happened? They will go take out where there is so much liquidity. They'll go and take that stop loss. Once they take out the stop loss, so these people buying will say, the market has started buying. They will leave weak behind, rush, come back here, take out this one stop loss. Everybody's out of the market. Then they will scale down to the required direction. So
okay, thank you.
Okay, so for me, I think I will want to invest my energy on GBP-JPY. I talked about GBP-JPY. I talked about GBP. Okay, isn't it talked about NZD-USD? For me, isn't it saying she was a long buy? For me, it's a short buy and subsequent sell. A short buy.
That's what I said now. I said a short buy. A short buy from.
Okay, a short buy, you said?
Yes, from that
okay.
0.6500.
Okay, yes, a short buy and a sell. That is what. If you remember, I called attention again because we do independent analysis and we'll come back like this. We'll see what the chart has to give us. Let me show you my chart for NZD-USD. NZD-USD. I said after NZD-USD, I'll go to USD SAR and I'll call it a day.
Josh, can you please look at EuroCard?
Okay, I'm coming.
Let him finish the NZD-USD.
Let me finish the NZD-USD. Okay, so NZD-USD, if you look at NZD-USD monthly time frame, the market, look at the market, a monthly time frame. See, one thing you must understand, look at last month ended with an impulsive candlestick. If market has closed with an impulsive candlestick, it is difficult for the market to just replace immediately. It's not possible. The market will do, it's just like, okay, let me give an example so that we understand this. See, if you're a driver, if you drive car, if you drive car, you don't just apply your brake. Immediately you apply your brake, you turn your steering. Is that how you drive? Those ones that are drivers.
No.
It's not how you drive. That's not how we drive. What you do, even if you're getting to a junction, what you do, as you're getting to a bus stop where you need to turn, you first and foremost be applying your brake gently. Is that correct? That you applying your brake does not mean you've turned. No. You just apply your brake to reduce your speed. You apply your brake gently. Apply your brake. When you get to the junction, you apply your brake. When you apply your brake, then you turn your steering and move. You don't just get to a junction like this and turn immediately. Nobody the road now. Even those ones they do fast and furious. My brother, forget those things. Don't do it on the road. If not, do you understand? That fast and furious in the movie. If you do it on the road on your own, you pay for people's car. If the person will be alive to even tell us the story. So that is what happens on the chart. When you see a candlestick with this body for last month, it is difficult. This is just the first week. It's difficult for price to reverse. What the price will just do is that it will step it down a little. It will step it down a little. And that is what this one has come to do. If you look at what we talked about, you'll see the handshake. It has come to do a handshake. It's now coming to do a handshake with the village chief. Look at it here. Sorry, let me get this. Now it has come to do a handshake. If you look at my line, this 0.67020. That's where I put it. The last week, the one, this is February, this is January, and this is December. That hammer is in December. Now, what happened is that look at the market, closed the last month. Now, this one came to have a handshake with December candlestick. And once it had a handshake, it has started going down. Look at it, it has started shading it weak. The market is going down. And where is it going to? I told us that the market will always come and fill the void. There's a void under here that the market will fill. Look at this rectangle here, this my rectangle here. The market will come and fill this void. There's this void this market is coming to fill in a monthly time frame. And the market will sell up to that point. But when it will sell to that point, don't ask me, I don't know. But what I know is that it will sell to fill up this void. Now look at it. If you go to weekly, look at weekly has done this. It has done this. So we're looking at still continuing our sell. Looking at continuing our sell. I'll tell you if you want, when I say a short buy, I'll show you why I say it's a short buy. Let's go to daily. Let's go to daily. This is daily. Now, this is daily. The market have done this. You see, the market has started giving us a bias for what? A sell. The market has started coming down gradually. A bias for a sell. Now, the question you ask yourself is that, where do I have the next void? Look at this market has a void here. The market, that's one thing you must always be careful. I feel this market have a void somewhere around here before its eventual movement. So this market that's doing, I won't be surprised this market come here to fill this void. And once it fills this void, it now scale down to this place where we'll have the other block will drew in monthly time frame. If you come up possibly to this point, then scale down, give us the swing. Remember, market does not move on a straight line. The market have done this. Look at the market have done this swing. This is a swing here. The market is now doing a retracement. The market is doing a retracement somewhere around here. Then the market will continue to sell. Telling us it's still a bearish market. Telling us it's still a bearish market. So if I go to the lower time frame.
So for NZD, a short buy, then a sell.
Yes, NZD, my bias is a short buy and subsequent sell. I've actually written it on my journal. A short buy and a subsequent sell. So what is Tuesday?
Hello?
Yes.
Sir Josh.
Now let me show you. Huh?
Continue.
Now let me show you again. Let me show you something again. Let me show you something. See, when you come to H4, look at my other block in H4. Look at this market has created. This market created a swing here. Okay, swing here first. This market did this. I want to believe we're still seeing our chart. The market created this. Sorry, I don't know why I usually take time when it comes to my own analysis. People will do and leave time for me. Now the market will do this. Now this one, look at what I'm expecting. The market will do this, giving me what is called a head and shoulder. Then we'll scale down somewhere around here. Scale down somewhere around there. See this market. This is the head. This is the head. This is created the left shoulder. This is the left shoulder. This is the right shoulder. And this buy. That's why I say it's a short buy. I'm expecting a buy somewhere here to fill up this void. There's a void here, and there's an order block here. So price, when you have a void and an order block, the price will fill the void first. Then if there is still opportunity to go touch the order block, then scale down. So this market is doing a head and shoulder pattern for us to scale down. And that is what I am expecting for NZD.
Okay.
Okay.
Okay, that's not even the buy I'm looking at. I know that it will either sell from there or fill that void first. But the buy I'm expecting is even below, after this other block, below, just at around here. Just below, yes. A little below this price. Yes, on weekly. That's 0.65.
Yes, I wrote you that price is sold for a buy. I wrote that price, so say 0.6500, right?
Yes.
Yes.
After this movement.
Good. After this movement, yes. So we'll be expecting a buy, yes. So for now, a short buy. That's in the entry. If you are a day trader, you expect this short buy up, then it scale down to that price where is in the top about. Then we'll be looking at the eventual buy of that one. So that is it. So that's for NZD USD. Somebody said we should look at EuroCAD, right? EuroCAD. Let's go to monthly time frame.
Sir, please, a little announcement. Tutu, please, if you're in this room, chat me up after this class, please. Tutu FS. I saw him. Is he okay? Tutu FS.
I saw him when you.
Yes, I will drop my number. Please chat me up after.
Okay, isn't it? Please, after now, remind me so that we'll make the announcement. The announcement that Oga talked about.
Okay.
That have been joining the webinar. Oga have something, has good thing for you. So we'll give you the good news. Please admit people are in the waiting room. Admit them. Okay, so we've actually spent 1 hour 30 minutes. Jesus. Okay, now let's see EuroCAD. This is monthly time frame. Let's see. Let me expand. Look at Eurocard. Let me see. This is downtrending markets. See the downtrending markets. Look at would want to come here. This will taking out this high. Look at this line I drew here. This resistant line here. Somewhere around here. So it has not taken out this high. Let me go to weekly. This candlestick is still falling. Like I told you, we cannot take a decision, even if the first week is giving us a bullish bias. Let's go to weekly and see if we have something to show. Okay, weekly. And the divergence person that talked about, if it's this divergence, we would have taken this by also. Taking this back. Okay, this weekly, based on weekly, I will be expecting, if this candlestick takes out this, if the price take out this 1.46400, that's where I have this my line. If it takes it out, but before this market will buy, based on this impulsive candlestick, the market will do a retracement, a little retracement down to this point. Like I trade. I'm expecting a little retracement down to this point, for the continuous buy down to this point. I'm expecting price coming down to this point. Price coming down to this point. Price coming down to this point. Then after that, we'll be expecting buy. I'll tell you why. I'll be expecting buy to this other block. Expecting buy to this other block. Why? Based on stop run, this market has done a stop. There's a divergence that produces stop run. This is a stop run. Now, what I mean by stop run, when I was telling you that at this point, look at this point here. At this point here, if you look at it, so many persons would have entered this market for a buy. You enter this market, market is buying, they are groovy, market is buying. The market came back and did a stop loss. Their stop loss somewhere around here. Look at this market, came here with this week to take out this stop loss. And once this market has taken out this stop loss, it went up, creating a divergence, leaving week behind, and it went up to do this. So I'm expecting a pullback down for this market to complete this leg. If you look at it, it's like the market wants to do a W. The market wants to do a W. The market wants to do a W. And if that's B, we're expecting price up here. We're expecting price up here. So I think this is a good trade too. Eurocard, we're expecting price come down a little, do a pullback a little, they will continue to buy. But it will not take out this low. If it takes out this low, my brother, sell. But if it does not take out this low, which I don't think it will take out this low, then we'll continue to buy for Eurocard. Eurocard. Who asked that question? Exactly.
Yeah, I was the one.
Oh, is it clear? Was this your bias?
Yeah. That's my. I was even looking at it from perspective.
Sorry?
I was looking at it from H4 for that
H4
bias. Yes.
For your buy bias.
No, sell.
Okay, that's it, right? Yes. When I did that in daily time frame, it doesn't mean I will come and buy in daily time frame. For this market to come by or weekly for that market to buy, that means I'll wait and the market will finish the buy. It can scale down to H4 and H1. Since you have seen that, okay, this market is selling it. Well, let me remove all this so that let's scale down to the point so that we'll be on the same page. You see, when you understand how to do this analysis, you can even trade even if it is 5 minutes. But when you were looking at 5 minutes, do your analysis in 5 minutes and take your trade in 5 minutes, that's where your problem starts.
Yeah.
So now when you come to H4, look at where we're selling to here. So now you see this H4 now. At H4 now, look at what is happening in H4. So my brother, just wait. Possibly, let's see what the market will do. If the market will go take out this high, or take out this high, leave weak behind, then we're selling. But our bias is a sell for this market. We're selling up to this point here. Then we continue the buy. So you're correct. Our bias is a short sell.
Please, what is the selling pips down?
The number of pips we're selling.
Yes.
We're looking
So
at.
I cannot see the.
We're looking at over.
So the value, please.
It's interfering. Which value are you looking for? Which value are you looking for? Huh?
The value that we are going to stop selling. The value that we are going to stop selling.
Okay, the value we're going to stop selling. Okay, let me see.
Yes.
We're looking at, we'll take out our profits or take out our sell at 1.43660. 1.4360. That's where we're selling to.
Exactly. Yes.
Okay,
yes.
Thank you,
That's
sir.
where we're
Thank you.
selling to. We're selling to that point. Yes. Thank you very much. So that's what we're selling to.
Thank
Okay. So you're welcome. You're welcome. Let me rush through USD ZAR so that we call it USD ZAR. USD ZAR. My bias for USD ZAR is a buy. USD ZAR. Still the same thing. USD ZAR is printing in daily time frame. USD ZAR is printing an inverse head and shoulder. Inverse head and shoulder. So please, if you don't have money, don't trade this market. I beg you, I don't want somebody to come back and say, my market, my account got blown. This market is market that if you're not in the right direction, my brother, the money will go as high value. USD ZAR, but I'm not saying you should buy immediately. If the market gives us opportunity low because of this bullish candlestick, if it sells a little, gives you opportunity, please buy the market. And we're buying to this other block. We're buying to this other block. This one. Buying to this other block. Why I said is that this one, this other block, this one does not, to me, this other block does not qualify for an other block. This bullish candlestick before this bearish run, this two bearish run, does not qualify for an other block. From what I'm seeing, my eye gauge, it does not qualify for an other block. This is the one that qualifies for another block. So if this market comes down, it's going to gather momentum to break this other block. And if it breaks this other block, we're coming down up here to scale, to do this, to enter the trade, and the market would have done what is called an inverse head and shoulder. The next, this leg was what brought this head and shoulder to come out. So we're looking at, it might take some time, but well, bias is a buy. Even if you go to a lower time frame, if it's an opportunity to buy, once the market gives you a little discount, buy, because the market is going up. You cannot, most of us will know, if even me said, will not even be this market to collect all these pips. Even if it's 100 pips, 10 pips, 20 pips, depending on your targets, please collect and leave the market. Met your target is always have a target. Sometimes we will do this analysis, market will come and mess us up. Always have a stop loss. Always have a stop loss. Oh, this is the much I have. This is much I have. I don't know. Robinson, Robinson, are you there? Or Emma? Please, if you're there, do you have something to share on COT? Sorry, I took almost all the time. It's a very bad character of mine. I don't know. Robinson, you have COT. As I'm talking about Robinson, that's my colleague. So many persons have left the room.
We're here with the.
Okay, it seems Robinson. Ima, is it you?
Yes, it's Emmanuel.
Yes, I'm here. I don't have anything for COT.
Okay, nothing for COT yet. Let's see if we have a fundamental. Let me go to fundamental. Let's take some few time and see if there's anything for fundamental. I'll just run through fundamental. I won't talk too much. Just run through fundamental. Then I'll give the news to what's more said. We have fundamental for the week. Monday, Sunday to this Sunday. We have Monday. Have unemployment rate. JPY. Okay, Oxy have retail sales by 1:30 today, or 1:30 this night. Retail sales. Let's see if it's going to affect Australian dollar. Retail sales and ANZ job advertisement month to month. Let's see what it has for us. Chef have foreign currency reserve. Chef have unemployment rate. So if you trade chef price, look at for what happened. Lagarde will speak. Wow, this woman's speech is always a problem. Lagarde by 4:45 on Monday. ECB President Lagarde speak. Their rate came out unchanged on I think that was on Friday, right? Yes, that was on Friday.
Sir.
Was it Thursday?
Thursday.
Yes, sir.
Okay, their rate came out unchanged on Thursday. This woman spoke, and that is what brought about that giant candle you saw. So that's the president of the European Central Bank. The governor, when she speaks, then we'll see what happens. So if you're opportune, listen to her and know what the direction will be. So JPY have bank lending, household spending. USD have consumer credits. Consumer credits has to do with I think the people in US, their propensity to they have high propensity to what's it called again? For you to be giving credits, that means you have money to spend. That means you can repay that credit. You understand? So they have high propensity to repay such loan. Credit card is a loan given to you. So for you to give the loan, that means if the value increase right from that as at the previous month, if it increase, that means the economy is doing well, and now the banks can issue credit card to individuals because they know they can pay. They have the ability to pay. So look at what happens at 9:00 p.m. for USD on Monday. Okay, we'll have a GBP. Okay, JPY have a very important one. Average cash earning. That's by 12:30 Nigerian time, GMT +1. Average cash earnings, household spending, bank lending year to year, and current accounts. Very important. This could have massive movement. That's about GBP JPY. When this will come out, you will see that before you wake up, you see that candlestick. You see that giant candlesticks. Why? Because it has strengthened JPY. So let's see what happens in the market. If you can be awake by 12:30, 12:50, let's see what happens in the market. So just have that on your radar. GBP have a retail sales monitor year to date. The NZD, the governor will speak. Whenever you see governor speaks, it have influence. It tells you the direction of the market. People that are long-term traders, investors, they invest based on the governor when they speak. When Emefiele in Nigeria speaks, people outside that wants to invest in Nigeria listen to the speech of Emefiele because they know the direction, the trajectory of the Nigeria economy. If that happens, if they feel it favors them, they will come into the country and invest their money because they know in the long run, say 1 year, 2 years, they will recoup their investment. So they want to engage, they want to invest in that economy. The same thing with we that are buying and selling. If you buy USD, you are an investor in the US economy. So for you to invest in that USD economy, you must know the direction. You must listen to the governors as they speak to tell you the economic indicators that will be moving them, what they are looking at that point in time. And that is why fundamental is very important if you want to trade. Okay, economic watcher sentiment, JPY. Euro have French trade balance. Italian trade retail sales. Let's just look at it, but I don't think it will have much impact. The governor is speaking, so let's see what happens. The governor's speech will overshadow all of this. CAD have trade balance. USD have trade balance on Tuesday. So look at for what happens in this period. USD at 4:00 have IBT, TIPP economic optimism. Some persons will be there asking what is IBP. Please, you can go to this box and refresh your memory on what IBT, TIPP. I don't memorize all of these things because I can always come here and know what is TIPP. TIPP is what? Let us go and see. IBD. IBD is Investors Business Daily. Why? TIPP is Technometrica Institute of Policy and Politics. You can read and understand what it's talking about. Okay, now we'll have inflation expectation quarter to quarter for NZD. Let's see what it is. Let's look at ones that move. We'll have, okay, Euro have 30-year bond auction. Let's see what happens. Right? It is tentative anyway. There's no actual time on Wednesday. So let's see what happens in Euro. Oh, we'll have crude oil inventories. It affects CAD also. CAD, the governor will speak. Macklin, the Bank of Canada, the governor will speak. Macklin. So listen to his speech. I mean, USD have 10-year bond auction. All of these things are moving towards tempering of USD. If they temper USD, especially when they're talking about their rates, or they even hike rate in USD, that period we'll talk about it. If they hike rate, in fact, we're expecting a hike of rates of USD in March. If they hike rates, if you have not funded your life account, I'm feeling for you because you will not make money. Because that market will buy and buy, USD will buy and buy and buy. If it is base currency, if it is cold currency, it will sell and sell and sell to the grave. Okay, we'll have, let me be fast, so many persons are leaving the room. USD have CPI, core CPI, unemployment claims for Thursday, so it's very important. USD on Thursday will have so many news. Governor, Australian dollar, Louis will speak. RBA, Reserve Bank of Australia, the governor will speak. 8 o'clock, federal budget balance for USD, 30-year bond auction, natural gas, mortgage delinquencies, unemployment claim, core CPI, that's consumer price index. These are massive news for USD. Please, on Thursday, stay glued to your system. From 4:30, the market will start having reaction. Please, very important. No, from 2:30, the US section, the market will start having volatility. So please stay glued to your system so that you don't get bonds. Now on Friday, we'll have quarter to quarter for GBP. Construction output month to month. GDP is the boss. GBP will have GDP. Month to month is the boss. At the same time, they'll have goods balance, index of services, 3 months, industrial production month to month, manufacturing production month to month, prelim business investment quarter to quarter for GBP. On that same Friday, US tentative, we don't know the time, Federal Monetary Policy report. Please, on Friday, look out for this news. If you don't look out for this news, please, on Sunday, once the news is released, come to this point, you will see where they will put it. More hawkish than expected is good for currency. Report provide a summary of discussion of the conduct of monetary policy and economic development and prospects for the future. It is submitted along with testimony from the Federal Reserve Chair to the Senate Committee on Banking, Housing and Urban Affairs and to the House Committee on Financial Services. Very, very important. If you look at this, in fact, once this is placed out, then we'll get investors will start thinking, will start believing that these guys will temper and these guys will hike rates in March. And if they do, they are good to clear the market and start collecting. So that's the news, that's the fundamentals for the week. So let's see how well we apply all of this. Thank you very much, everyone. The news we'll have for you is that the chairman of FXPace has said that he wants to encourage persons that people on this platform have always been attending the weekly analysis, that he wants to give them he wants to give them a $50 to trade. But the condition is that only those that have funded $200. If you fund $200, if you look, you fund to open your account and fund $200, it will give you $50 that you trade free of charge. You use it to trade to augment your equity. So if you fund even that existing clients or even new clients, more especially, to encourage them, it will give you $50 to trade. He has $2,000 he wants to give out. First, how many persons that will come in? First, 10 or 20 persons.
40 persons.
40 persons, $2,000 to give to you. So if you fund your $200 account, please meet any of the admin. You will tell him, please, this person has funded $200. Please fulfill your promise to them. These are $50 will be a hedge for you. Even if you're trading, that one that they dash you can be using it gradually as a risk, as a stop loss, while your equity is still there with you. It will enhance your trade. So please, let's ensure we trade. If you have not funded a life account, please do well to fund a life account in the first place. Chat any of the admins, please. Anybody can chat me, you can chat Izine, you can chat Abanu, Emmanuel, you can chat Robinson, you can chat even, what's it called, Stanley. We're all here. Please can chat us, open your life accounts. That will be good for you. That you trade. What this is we're talking about, it will not do you good if you're trading the demo account. It will not do yourself any good. On the life account, like these ones we've told you, we've analyzed. In fact, for me, one that is on my top priority is GBPKPY. Let's see what happens. Thank you very much. Izine, I don't know, Tutu, Izine said if you're here, please chat how, I don't know if she has something for you or have something for her. So you can chat how, just enter the room. Okay, thank you very much. I don't know if you have any question to ask. If you have any question, you can ask within this period of time. It's 11 o'clock Nigerian time. Let's go back and see.
Yeah, Josh, thank you very much for today's webinar. It's very interesting and very detailed. I would have liked to ask, what is your expectation on this Australian dollar news that is coming up? Yeah, the retail sale for Australian dollar.
Retail sales. Well, I actually do not have a bias for it. I don't know what the retail sales will be like. Let me get it again. Retail sales for Australian dollar. You have any pair on AUD to your trading? Yeah.
Yeah.
Hello.
Yeah.
Do you have any pair you're trading on AUD?
Yeah, I'm just looking at GBP Australian dollar.
GA. GA is a buy market. GA is a buy market. GA is a buy market.
Okay.
Are you looking at selling it?
Yes.
Huh?
Yes, I'm looking at selling it.
Looking at selling it. Let's oh, no, sorry, please. Let's see. GA. Okay. Let's see monthly time frame. Monthly time frame. This is a monthly time frame. Okay. Let's go to weekly. Monthly time frame is telling us bullish. This is weekly time frame. This weekly time frame. Okay. All right. So what I'm looking at is, this weekly time frame has given us an inverse head and shoulder that's played out. This is an inverse head and shoulder, which have played out already. This is the left shoulder. This is the left shoulder. This is the right shoulder. The market has played out. It has done this. So market has done a handshake. I'm expecting a buy of this market. A buy of this market. A buy of this market. But let's see. I actually have not done more detailed analysis of this. I'm expecting a buy of this market. Okay, now whoever is asking, please look at it. This market created a high. This is a high the market created. This other high, I have not taken it out. Until it takes it out, then our buy bias will still stand. But if it does not take it out, this market will sell a little. This market will sell it. That's even creating a divergence. Creating a divergence in the weekly time frame. The divergence came here up. Okay, now, hello. If you're listening to me, look at this market. Just be looking at this market. Even when the news come out, if you are awake, look at it. Even if you're not awake, there's no problem. Just, I don't think that retail sales will push the market that far. It's not, it's a leading indicator of retail sales. But if you look at it and this market takes out this high, please, we should be looking at buying. But if it does not take out this particular high, let me mark it. Let me take this one. This particular high it has created. If it cannot take out this high, let's say this high here. If price cannot take out this high, it's just smoking. Let's say here. 100 or something, daily time frame. If it did not take out this high, please, our bias will remain a sell. We'll sell the market. But if it takes out this high, then we should be looking at buying. So our bias is not, I'm not very certain, but the condition I gave is that if it takes out this high, then we should continue to buy. But if it does not take out this high, that means we're selling. We're selling down to this place, this trend line here. We're selling down to somewhere around here. Sell this. So if it takes out the high, please don't sell. If it does not, if this news comes out and you see that this market, it has started creating, look at the week it's leaving behind, telling us a bearish sentiment anyway. But if it does not take out this high, please sell. Sell the market.
Yeah, so my stock loss is going to be a little above the high.
Above here, yes, stop loss above here. Yes, you can actually do that. Put a stop loss. If it comes takes it, no problem. If it does not, then you continue this. You enjoy the sweet ride.
Yeah. Thank you.
All right, thank you so much. You're welcome. Thank you. I like people coming up with opportunities like this. It will help us. Tutu, you raised your hand.
Good evening, Mr. Joshua. Please, what's your bias on USD card?
USD card. I think Ezine did that analysis. Ezine, should there. Okay, a USD card. This is let me go to weekly time frame. USD card. USD card. USD card is still bearish for me. Still bearish, even though we still have a bullish sentiment, but it's still bearish for me. Still bearish. USD card. So I still hold the sell for USD. But I don't know how far it will go. I didn't actually do analysis on this. No, I didn't do analysis.
I think she said, hello?
Yes, I can hear you, sir.
I think Ezine said the price should go down to 1.26060 for a buy on USD card. I don't know if I'm right. That's what she said. Buy and hold.
The price is what? What is the price? 1. What?
Say the price will come down to 1.2606.
1.2606.
It will come down there then for a buy.
Okay, that means the price will come to where I have my horizontal line. Let's go to weekly time frame and see what happens there. Now, if that's the case, the market has always come there, has almost come there. Okay, okay. So what we're saying is that What I'm saying is that if the market is coming to that point, to me, the market has done that. Okay, what happened is that look at it. This market, let's do this. This market have done this swing like this. Please check that my charger. Okay, so now what our buyers look at this market have done this. It has done a retracement. Has done a retracement. Now the market is going for a buy. Okay, what is in the meant is that this market will come back to do a handshake on this level. Yeah, this level. Yeah. The market could definitely come to do a handshake on this level. Then before we continue the buy. Let's go to daily and see what happens. Okay, now we're saying daily that this market will come back, do a pullback to this place. This is where we have a 1.26, a 1.25, 800 or 1.26, depending on what is in the set. But within that zone, market will do a pullback to that point, then continue the buy. So we still hold a buy bias, but let's see if the market is selling. We're selling short to continue the buy because the market has done a pullback. Let's see what's the matching ratio. The market have done 78.6. The market did 78.6, so the market is going up. We're doing a bullish movement. So it's a buy bias. I still hold. It's not the USD card is not my radar. Unless I see. So, but it's still a buy bias. It's still a buy bias. I want to do that. Tutu.
Josh,
no.
Sorry, the second pair you analyzed, was it Euro GBP or GBP USD?
Euro GBP.
Okay, thank you.
Euro GBP. Okay, this is part of this. We'll spend 2 hours. Okay. All right, thank you very much, everyone. I just believe we did justice to our class today. Thank you all, each and every one of us. We have 250 something, and now it has come down to 10. So persons need to go prepare for work tomorrow. Some persons need to sleep early. So those of us that remain to the end of the class, thank you so much. Have a good day.
Thank you, sir. Good night.
Thank you so much.
You're welcome.